Hello everyone. In this video we are going to show you how to construct a balance sheet for a bank. We will construct the balance sheet for AAA Bank using these mixed accounts. The first step for constructing a balance sheet is to determine whether each account is a current asset, a fixed asset, a liability, or an equity. So first of all, time deposits are liabilities, capital stocks of course equity, cash assets, current assets. Also, federal funds are current assets. If we have federal funds purchased, these are considered as liabilities. But since these are federal funds sold, they are considered as current assets. Fixed assets are, of course, fixed assets. Reserves for loan and leases losses. These are contra asset account. They must be in the equity side. However, we put them in the asset side as negative. So we will consider them as asset. Individual loans, of course, these are assets and current assets specifically. Now accounts, they are considered as liabilities. Other borrowings, of course, they are liabilities. And finally, the demand deposits, of course, they are liabilities. The second step is to construct the balance sheet. Of course, we know that we have two sides for the balance sheet, the asset side and the liabilities and equity side. Let's start by ordering the assets. First of all, we know that we must set the current assets first. So first of all, we should put the cash assets. Then we have to put the federal funds sold. After the federal funds sold, we have only the individual loans as current assets. After the individual loans, we must put the reserves for loan and leases losses. So in this case, we must subtract the reserve for loan and leases losses from the individual loans. So in this case, 124,000 minus the 18,000, we will have the net loans, which is the $106,000. So net loans minus the reserves for loan losses will be equal, individual loans minus the reserves for loan and leases losses will be equal to the net loans. After the current assets, we should put the fixed assets, and all the assets are done. We will have the total assets. The total assets is the summation of the cash assets, the federal funds sold, the net loans, and the fixed assets. Let's move to the liabilities and equity side. Of course, we should put the liability at first, the demand deposits, then the now accounts, the time deposits, and finally the other borrowings. These are all the liabilities, and now we should sum up these accounts to obtain the total liabilities. So total liabilities is the summation of all these accounts. And finally, we have the only remaining account, which is the capital stocks. And of course, we should have the total liability and equity, which must be equal to the total asset. In this case, to calculate the total liability and equity, we must add up the total liabilities plus the total equity, which is here only the capital stock. So we could verify our work if the summation of these two accounts will be equal to the total assets.